Let's bring in our next guest analyst. We've got Oliver Slope from Blue Line Futures coming to us from Chicago. Thanks for being on the show. Looks like you might be in the office today. I don't know. I'm taking a little guess. Anything you want to get off your chest when it comes to some of these prices? A little bit of a bounce back in wheat, but everything else,
Yeah, well, we've certainly got a reminder here over the last couple of weeks that risk happens fast, and I think a lot of people may have gotten lulled to sleep a little bit at the end of last year and to start this year, where we saw that volatility really thin out, and we're testing the low end of multi-year lows in terms of measuring the volatility in these grain markets, and now we're seeing an uptick in that, which really goes in line with what we see seasonally, and with the outside markets moving around the way they are, I think this volatility is probably here to stay. Obviously, a lot of that volatility has been on the downside here this week. Will that continue? To be determined. We've got a huge report at the end of next week. My consensus and my theory is that we're going to chop around on both sides. So I do think that producers will have a better opportunity to get some hedges on, but I think using relief rallies is certainly going to be something that producers are going to want to consider using as an opportunity to help protect prices.
Yeah, you're right about I looked at the charts and the numbers. I mean, we were up. Corn was high for. You had at least 6, 8, maybe even 10 weeks to kind of lay off some decent risk. So you're right how it happens so quickly. And unfortunately, Oliver, I don't think that these outside markets are going to stop doing what they're doing anytime soon. So that's going to be something that all producers are going to have to deal with going into the spring and fall.
Yeah, absolutely. I think that's going to keep the volatility really high. One thing that we're keeping a close eye on is the commitment to traders report. We're pretty much caught up to speed now, and the funds are net short about 50,000 contracts of corn. They still had a long position in soybeans, so I think you're seeing that being liquidated as well. And I've heard quite a few people mention that funds don't want to be short grain this time of year, which psychologically that makes sense, but it doesn't always play out that way. I look back to 2017, we saw funds short 80,000 contracts this time of year, and by May they were net short 200,000 contracts. So they can build a big short position in a short amount of time, and that's not something that we've seen for several years now. I think we've been conditioned to think that funds are always going to be long grains, and that's not always the case. That's why you need to be proactive in protecting price.
Right, I agree. I was going to say something about 1989, but then you know how old I am, so I'll just keep that to myself. All right, thanks for being on. Stay right there. We're going to go away. We got to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures.